This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacy-Marie Ishmael, managing editor of crypto for Bloomberg News. It's Wednesday, December 14th. Hey everybody, quick housekeeping note. This episode was recorded before Sam Bankman-Fried was arrested in the Bahamas earlier this week. SBF, as he's known, has now been charged by pretty much everyone, including the Securities and Exchange Commission and the Department of Justice, on allegations of everything from defrauding investors to commingling customer funds. While the following episode unpacks the year's biggest stories, I would be remiss not to admit that this is perhaps the biggest of them all. We'll be covering SBF's arrest and these charges against him in much more detail in other episodes this week. Thanks for tuning in. It's safe to say that 2022 wasn't the best year for crypto. By late January, Bitcoin had already shed half its value compared to the all-time high set previously in November, and that number, if you remember, was nearly $69,000. Bitcoin prices then stayed on a downward trend. That trend accelerated after the first major crisis of 2022, the collapse of an algorithmic stablecoin called Terra USD. Now, the implosion of what was once considered an ambitious experiment for DeFi sent shockwaves through the industry, triggering the collapse of a crypto hedge fund called 3 Arrows Capital, which then led to bankruptcies at companies called Voyager Digital and Celsius. And frankly, it was starting to feel a little bit like the Hunger Games. Crypto CEOs and other senior executives racing for the exit, true believers getting into Twitter fights about whether centralization was the real enemy, all against this weird backdrop of conferences and parties where people were trying to rekindle enthusiasm for their Bored Ape collections. It was a weird time. And then, most recently, and for a lot of us most surprisingly, you had the collapse of one of the most significant crypto exchanges in the sector, FTX. Quite the year, as not even done. Here to break down the year's biggest stories with me are Bloomberg reporters Vildana Harik.
Crypto people like the idea of becoming more mainstream or just being able to be part of your everyday conversation.
And Emily Nicole.
High yields that crypto had been advertising during this period of low interest rates in the real world to entice more people into the system, those frequently and in big ways started to show cracks.
Emily, Vildana, what a pleasure to have you on the show.
Thank you so much for having us.
Emily, could you just remind everybody what your actual job is? Because I feel like it's a little complicated.
Yeah, so I'm technically the Bloomberg crypto blogger, which is a real nice phrase. But it basically means that in addition to doing news coverage on crypto, a lot of what I do is analysis in terms of exactly helping readers understand what happened in this year in particular, what went wrong, and who the players were and how that might all be interlinked across the whole year, basically reminding you about like, here's the big news today and here's what you've forgotten already happened that should give you all the context.
Good, please remind me. But Vildana, welcome back. What do you do?
I love to be on this podcast specifically. That's my main job. No, I'm actually a cross-asset reporter, which when I tell people that, they always say, what are cross-assets? And I don't have a very good answer, except that we cover all kinds of markets, including, for me, the crypto market, which has been actually very fun and very rewarding over the last 4 or 5 years or so, because the stuff that happens in crypto is sometimes so much wilder than anything you can find in the stock market or the bond market.
Mm-hmm.
And it's sometimes very painful to go through, obviously, for a lot of people. But it's been very, very rewarding to be covering and writing stories about.
And you say this as a person who's covered some wild rides in stocks and bonds, right? So, and one of the things that we're going to do in this episode is talk a little bit about what was happening in crypto and how that was informed by that broader macro context. But first, let's do some like go back in time music.
That's a really good soundtrack.
Yeah, our sound engineer is going to be mad at me, but let's go back in time. Because I feel like to start 2022 and to talk about what happened, we have to go back to 2021.
Mm-hmm.
And specifically, we need to go back to the Coinbase IPO.
Yes.
What was going on around the time of the Coinbase IPO, Vildana?
We thought 2022 is wild. 2021 also was very wild because we had, just from the pandemic, a huge stock market rally. We had prices of all manner of crypto things, including NFTs and stuff that we had never heard of before, skyrocketing in value. Everybody had laser eyes on their Twitter profiles, which they've since removed. And with around the Coinbase IPO, I mean, there was just a lot of excitement around it. It's coming out to the public, so to say, was just very exciting for a lot of crypto people because crypto people like the idea of becoming more mainstream or just being able to be part of your everyday conversation. And Coinbase and obviously a lot of other developments sort of helped that. But we had very low interest rates and there was just a lot of speculation, a lot of froth. GameStop and all of those sort of meme stocks, everything was skyrocketing, including so much stuff in crypto.
Mm-hmm. And that was, April 2021. There was a sense of optimism.
Yes, to the moon.
We were like, everything is going great. Fast forward a couple of months or several months to September, El Salvador starts accepting Bitcoin as legal tender. More enthusiasm. The folks who were looking at Bitcoin are like, here's the first best example of an actual government, a country taking this token seriously. Fast forward another couple of months, you have, as you mentioned, the hype around non-fungible tokens culminated in every celebrity going on whatever nightly talk show talking about how amazing their Yuga Labs Bored Ape situation is. We get to November, Bitcoin hits an all-time high.
Yeah, and there was one more important thing that happened around then. In October, we had the first Bitcoin futures ETF. Mm-hmm. And actually, there are a couple of them. But when the first one debuted by ProShares, it saw so much trading that it was just like for the record books, basically. Mm-hmm. And it amassed more than $1 billion in assets in 2 days, which was also a record. So that also was, Bitcoin's price was hitting record highs around that time. And then in the weeks following, it kept sort of hitting those highs until we got the almost 69,000 per coin number.
So we're going into December 2021. Everything in crypto is amazing.
Amazing.
Crypto and the booming.
Interesting to look at Bitcoin as well in the cryptocurrency space. Of course, this weekend, Emily, everyone paying attention to the Super Bowl.
February 2022, it's the Super Bowl. One of the things that was remarkable is, and hindsight is everything, but it was, people were spending millions and millions of dollars on really splashy crypto advertising. And the Super Bowl, even if you don't care about football, American football specifically, is a vehicle for kind of cultural commentary around ads, marketing, branding, sponsorship. And so much of that commentary was around crypto. Emily, what happened right after that?
In March, I think probably the biggest thing that happened that month was the hack of a bridge connected to Axie Infinity, which was responsible for making sure that all the people who played Axie Infinity, the blockchain game, could cash out their earnings because it was, at that time, very popular among people in lower income countries for earning a living. And for a long time, they couldn't get any of their money back.
So that was the first, I suppose, ding on sentiment, right? But it was, because it was the first, it wasn't the worst. There was a sense of, that seems bad.
There's always stuff like that happening in crypto.
Exactly.
I think that was the sense.
It's like, well, yeah, it's a crypto hack. It's not ideal, but we'll get through it. Then we started to have to know what an algorithmic stablecoin is, and specifically Terra USD and its associated token, Luna.
Terra USD and its sister token, Luna, lost their peg to the dollar in the last few weeks. They had a spectacular meltdown, sending prices to near zero and their market value to a shadow of the combined.
Emily, why did so many folks need to care about that?
So Terra, USD, and Luna had been kind of the darlings of the DeFi sector for quite a few months leading up to that point. There had been quite a lot of noise going around about Terra and Luna specifically. Galaxy Digital's billionaire CEO Michael Novogratz famously got a tattoo of a Luna wolf to show how much he cared about the cryptocurrency. And so when the two collapsed together in the space of about a week, wiping about $40 billion in value, this was a sign that actually something in the market infrastructure, in the way that crypto was being sold to people as this like solve all magical financial instrument, was not okay, and not everything was going to be living up to the promises that had been touted by its founders.
So Terra as an indicator of sentiment was a huge deal, but it was also a huge deal in terms of the actual market consequences that accrued as this thing started to collapse, because it turned out, as we have reported, some of the biggest and supposedly smartest players in crypto were very, very exposed to either the Terra USD stablecoin itself, to other people who were exposed to the Terra USD stablecoin. Vildana, talk a little bit about what it was like watching the collapse happen after that.
Well, two things. Just one thing to just set the scene a little bit more. What we have happening this year, obviously, is the Fed was raising interest rates. And that's really sort of put a damper on sentiment, not just in crypto, but also in the stock market. The bond market also wasn't doing well at all during 2022. And so you had just people being very risk averse all year long. And that, in particular, I would say, hit cryptocurrencies and all manner of cryptocurrencies and all manner of crypto offshoots and, whatever else. NFTs also plummeted in value. But to your point about the interconnectedness and the big players that have been involved, these are people who had huge followings on Twitter, where a lot of crypto discourse happens. And they tweeted quite a bit about all kinds of stuff, sometimes at each other, and sort of started these feuds, which I'm sure we'll talk a little bit more about as regards FTX. But it sort of just started showing people just how interconnected all of these different companies were, who was loaning money to whom, vice versa, who was buying what. And then once one sort of block in the domino fell, how it started impacting all sorts of other companies. And everything was just very interwoven.
I can't believe you didn't go for how one block in the chain.
Oh, gosh, missed opportunity.
It was right there.
Oh, my
right there.
Gosh. I'll kick myself forever for that.
Up next, more from Bloomberg reporters Vildana Harak and Emily Nicole on the year's biggest headlines and what all of this news could mean for 2023. We'll be right back. So, Emily, to Vildana's point, you have this interconnected web of relationships, many of whom are people who actively hate each other. What does that have to do with 3 Arrows Capital?
They had made some rather sizable bets when it came to Terra and Luna. So when the value of those holdings went to zero, the loans that had been extended to 3 Arrows Capital, with which it made most of its trading, they were no longer able to meet those loans. And so when the margin calls came in, everything just basically collapsed, and that went down too. But being a hedge fund of sorts, 3 Arrows Capital had clients. Many firms had either loaned money to 3 Arrows or had invested in it. And so therefore, as Vildana described it as dominoes, those started to fall too. And we get to now see the beginnings of this ripple effect that spreads out from almost like Terra as the start of it, although obviously the market had already started to show signs of weakness before then. But as we go further and further out, even as far as like this month alone, we still have people saying, oh, and the knock on the market that happened with Terra is the reason why we have losses today. And that slowly started the web of bankruptcies that we're currently in.
And when you talk about things like margin calls, counterparties, what you're describing is the fact that so many of these players owe each other money. So, you could be a hedge fund and you borrow money from this lender over here in order to do a trade on this other thing over here. And in order to do a trade on that thing, you had to put up some collateral. So 3 Arrows files for bankruptcy. In their wake, a couple of other companies, one called Voyager, one called Celsius, also file for bankruptcy. Celsius being perhaps the most consumer-facing of the entities that have been caught up in this so far because, well, what was the Celsius business model? What did they do?
So Celsius was in the business of giving people yields if you promise to lock up your tokens with them. So if you think about it a little bit like a savings account, but, just without any of the banking licenses or regulators or any of the bits that protect you if the company goes under. And what it turned out is that if people had read the terms of service, they would have seen that, and actually this is pretty common in a lot of crypto companies' terms of service, as we now know, if you gave your assets to Celsius, Celsius reserved the right to do whatever it wanted with those assets. They no longer really belonged to you in any sense of the word. So when what they had done in order to generate those yields that it could pay back out was invest those tokens elsewhere, rehypothecation. And as a result, if some of that went in Luna, that all went. If some of it went in something that was called staked ether, that also started to show slight signs of discount from the price of main ether. I won't get into the actual mechanics of it, but basically that was unstable too. And so eventually the high yields that crypto had been advertising during this period of low interest rates in the real world to entice more people into the system, those frequently and in big ways started to show cracks and signs of that they weren't able to sustain offering those yields anymore. And now if you see platforms offering yields of 8% is probably about the average now, but back then it was like 20%. That's also a massive warning sign to consumers that this is probably not something that can guarantee that yield for very long.
And Valdana, how does this fit into the rising interest rate environment that you described?
Well, I think because I talked to a lot of TradFi people, traditional finance people too, and all along what they sort of as onlookers into the crypto world had been saying is these are warning signs. You can't just earn 8, 10, 20% just lending out your crypto holdings or putting your money in some of these bank-like products without there being just so much risk involved. Mm-hmm. And this sort of kept playing out throughout the year. So we saw it with Celsius and Voyager, obviously, both of them going under, but then also later on with Gemini. And that also was a yield-earning product where people had put in Bitcoin or Ether or some sort of stable coin, and then it was called Gemini Earn. Gemini Earn would lend out those holdings and try to earn an interest in return for themselves. And those also have, the withdrawals have been halted and people can't get their money back.
So another example of the ways in which the mainstreaming of crypto that you referred to at the beginning turned out to have pretty serious consequences for people in ways that they weren't necessarily expecting or hoping for. Now, in around October 2022, a couple of months after these various
30
bankruptcies,
years ago.
30 years ago, after these bankruptcies start getting filed, we published a story about the wave of high-ranking, executive suite departures. Valdana, I don't even know if you even remember, but you were like one of the people who wrote the story.
I was?
30 years ago.
Kidding.
Because like dozens of, whether they are crypto CEOs or people in risk or heads of trading, were either being downsized, right? So there were layoffs and they were part of them, or they were like, I'm going to go spend some more time with my yacht.
Yep.
That is a real thing that happens,
I would love
folks.
to do that too, by
We're
the
not
way.
making that up. So, you start to see this sinking ship feeling sentiment. And that in and of itself, people are looking around and they're like, hang on a minute. Why are all these people losing their jobs? Why are all these people quitting? There were very, very significant layoffs at a lot of places. And then less than a month later is when we perhaps get into the part of the crisis that I'm not sure most people would have said, this is the next shoe to drop. And that shoe was the collapse of FTX.
And its CEO,
Sam Bankman-Fried. Emily, if it were possible to summarize the state of things about how we got there, what would you say?
So hindsight is 2020, obviously, and so now my explanation will be coloured by the facts that we know now compared to what we knew before. FTX had its own native token called FTT, and it appears that FTX, along with its sister trading platform Alameda Research, had been using that token for various purposes, but mainly one of those was, at least at Alameda, as collateral for loans that it had taken out to fund its trading activities. There are also some suggestions now, and these are being investigated still at present, as to whether or not FTX commingled customer assets with Alameda assets in order to be able to fund some of these trades as well. But in October, some of this information was leaked into the press, and Binance's CEO, Changpeng Zhao, said that he would sell a very large portion of FTT because Binance was concerned about how stable that business was. And from there it took, I'd say less than 2 days until FTX then said, okay, we are selling ourselves to Binance. And then less than 24 hours again until Binance said, sorry, no, we don't want that deal. And then another 24 hours until Alameda, Sam Bankman-Fried said Alameda would wind itself down, and then another 24 hours until FTX was in bankruptcy. So between Sunday and Friday, one of the largest crypto exchanges that we have was gone.
In other words, 30 years went by.
That was
during that week.
That was quite a week. And, the thing, just the gloss I want to put on top of all of this is like, while all of this was happening, everything that we've just described, Bankman-Fried had been playing the part of rescuer-in-chief, right? So when the collapse of 3 Arrows triggered the collapse of Celsius and Voyager and other companies, Bankman-Fried emerged and he's like, I will buy everyone. Or at least, he will buy the ones that he could A, raise financing for, and B, he thought was worth his and FTX's time. This was also a period in which there were intensive discussions around the world about how best to regulate crypto. And various crypto CEOs saying, all we want is regulatory clarity. Please give that to us. Here, we've written you proposals. So, of which Sam was the face. Obviously you also had Brian Armstrong, Coinbase CEO, being, represented in these conversations in the US. You had CZ of Binance being represented not in the US, but certainly in conversations in many other countries around the world. And now it's almost as if none of that happened. I think the sort of the strangest thing about 2022, it's not even that we're back where we started. It's like we're back into before the Coinbase IPO. Well, one, there's a lack of liquidity. Like the amount of trading that's happening in crypto has essentially fallen off a cliff, partly because some of the places people were trading on went bust. There is a real noticeable, shall we say, vibe shift in the sentiment for an industry that not super long ago was having debauched parties in Miami. And now they're worrying about being summoned in front of US senators and other types of investigators. And we have a definite change in tenor of the regulatory conversation because it's gone from how can we help this industry to succeed to how can we protect consumers. Emily, I want to make sure that, we don't only talk about what's been happening in the US. Tell us a little bit about how some of these things played out in the UK and Europe.
Let's start with Europe because that's a little bit easier. The European Union has been working on a comprehensive crypto regime for a long time, and that was partly the criticism of the EU earlier this year was that it had taken them so long to get here. But in June, they agreed the provisional steps for MiCA, as it's known, that would put in place some level of oversight of crypto companies and maybe a little bit of protection for consumers in terms of just helping make sure that companies, do as they say they do and are overseen properly by local regulators. There are things that are not included in there, which were some of the things that went wrong this year, like DeFi and staking and particular types of crypto assets. And so that will all have to come later. But the basics, right? And that is due to be going through final agreement in February and come into force in mid-2024. In the UK, however, there was some echoing at the start of this year about how, yes, crypto is going through a rough patch, but, there's still a dream to be had. So we're going to become a global crypto hub. And this was all in April under the Chancellor at the time, Rishi Sunak. And promptly thereafter, Rishi Sunak resigned because there was a very big political reshuffle.
You mean the government
country.
collapsed?
I'm trying to be polite about it, but basically we had no government for most of the summer. And that meant that everything that had been suggested up until that point in terms of crypto regulation, so that's things like putting in place an oversight regime, financial promotions rules, all of that got kicked to the side, including an NFT made by our Royal Mint, who make our money. And it's only now in December time that we are starting to get back on track with a government that's in place who looks to be staying around for more than 44 days, where we might be starting to push ahead with some of that. So by the time this episode goes out, there will have been discussions in Parliament about the Financial Services and Markets Bill, which will put in place powers for our regulator to start thinking about how it can properly oversee crypto companies more than just checking they're not terrorist financing. And next year we will start getting proposals as well on stablecoins and other bits. But that's where we're at.
We'll be right back. The question that everybody asks me when they extract the information that I cover crypto for a living is like, what's going to happen next? And my go-to answer is, if I knew that, I would work for a hedge fund.
Exactly. We'd also be partying on a yacht.
Oh, for sure.
Yeah.
A yacht in the Bahamas with everybody else who's partying on the yachts before those yachts get seized by the U.S. government or the Singaporeans. But I do think it is reasonable, and Vildana, I'll ask this of you, just given the work that you do on the cross-asset team, what are like the big macro economic things that are on the horizon in 2023 that may inform, if nothing else, at least the overall market environment that crypto folks are about to encounter?
Well, for a long time, and we've talked about this before on this podcast, crypto and stocks basically traded the same way. So if one went up one day, likely the other one was also going up, and vice versa. And the correlation was extremely high, and people basically talked about this all year long. And then what has happened with FTX and the aftermath of that is that those correlations actually became a bit uncoupled.
Mm-hmm.
So they're not necessarily trading in the same way. They're not trading in tandem anymore. And the idea is just that the trust within crypto has really broken. People just have much less faith in the system. They have less faith in, just about anything within crypto. They're just less trustworthy. And potentially, like going forward, people will once again start thinking about some of the macro forces that are impacting both markets, both the stock market and the crypto market. But right now it seems to be sort of on its own, as everybody's just waiting to see what the next thing to happen will be. If we do return to this idea that macro forces are impacting crypto in the same way that they did for most of 2022, then again, we'll have to go back to the Fed and what the Fed is going to be doing, where they've sort of signaled to markets that they'll just be less aggressive than they've been earlier this year, where they were doing these jumbo interest rate hikes, and that really was putting a damper on sentiment. So if they're less aggressive, potentially you could have riskier assets doing a little bit better. But there is so much more that people are waiting to unfold within crypto itself that could really impact prices still.
Well, thank you, Emily. Thank you, Vildana. See you in another 30 years or so.
Yeah, that sounds great.
I'll be there.
All right.
Thanks so much for having us.
You can find more of Vildana and Emily's reporting on the Bloomberg terminal and on Bloomberg.com. And definitely be sure to check out for and subscribe to our twice-weekly newsletter, which is also called Bloomberg Crypto. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacy-Marie Ishmael. We'll be back tomorrow.